Alright guys, welcome back to the portfolio. As you see, we are at $6,771 today, and we are down $158.95, which is 2.29%. And let's check out the past week. And in the past week, we're up 6.23%, which is $397. And check this out right here. Check this out. In the past month, we are up 60%, right around $2,562. And this is not typical performance that you can actually achieve realistically. I probably want to aim around 1% per month, but usually you have your up months and your down months. But as you see, this was a great month, and this is mainly due to the earnings which happened this past week, and mainly due to the Facebook option that I owned, which I sold off finally after I've been holding that for a couple of months. Facebook finally had that big push up, bringing the stock up 10% because they destroyed earnings, and that's awesome, and it brought my options up 200%. I'll probably have a screenshot up on how much I made in that one day, which is crazy because I didn't think Facebook was going to bounce back as hard as it did. And let's actually look at Facebook right now. As you see, Facebook is at $165, but if you look at the 1 week chart, you see that it did go up basically 10% in one day. It was just crazy. I was so excited. I was working. I didn't even check on my Robinhood at all until the next day, which it bounced up even more, as you see. And I did sell off my options right around this time because I didn't think that it would continue to go up, at least not right now in the near term, because Facebook is such a huge company, and it going up, what was it, maybe around 10-15% in around 2 days. People were obviously going to start taking off some of the profits, which, as you see, it's kind of happening right now. In the past 2 days, it's kind of like trending down a little bit. Maybe by March 15th, which was the expiration day, maybe just maybe it would probably go up a little bit more, but I wasn't willing to risk how much I gained from that, which is great. That's awesome right there. If I would have sold it at its low peak, around let's actually look a little further. Around right here, my option was worth like around $200, but I think I sold it off around $1,700, which was amazing. And as you see, if you look at right here, I have about $1,750 in buying power. That's how much I basically sold my option for, and that's amazing right there. That's the power of options if you know what's going on. And I'm also thinking about buying an option for a call option for Aurora Cannabis, but it went up 5% to today. So let's actually look at the options real quick. They have their earnings on February 11th, I believe. Let's actually look, when is their earnings? Yeah, February 11th pre-market. Let's look at the options real quick. Let's look at for the expiration on February 15th. Yeah, I was looking at this the other day, I believe yesterday, while I was working. I checked on the call options, and it was at 8 cents. So it was about $8, and I was thinking that if today Aurora Cannabis dropped, I would have bought some, but it went up 5%. So now, as you see, it basically tripled in value. But now I will just wait, and plus these are a lot cheaper. And one thing that I learned from the last option that I bought is not to put more than 5% into an options trade. That's just the limit that I'm willing to put my money in. I'm not willing to put more than 5% of my total portfolio, because with that Facebook option, I put around 25% of my portfolio at the time, and that was not such a good idea, especially with all the things that were going on with Facebook and all the news, all the bad news, bad press, and everything. That was just not a good call on my part. But either I can buy this and Aurora Cannabis does good, and I'll probably buy less than 10 contracts, so it will probably be around $280 around. That's the most expensive it would be, but I'm willing to wait until Aurora Cannabis drops down because it did in fact go up 5%, around 5%, yeah, about 5% today. So if Aurora Cannabis does drop more, I am going to buy a call option just because I have some money right now. But I'm just gonna hold off to all my buying power. To if there's any big drops, I'm willing to put to average down on my bigger positions right now. So let's actually look at our holdings right now, starting off with Apple. And Apple today is at $166.60, which is pretty good. Just a pretty average day, pretty boring. But in the past week, Apple is up 7%, which is awesome. And they did have their earnings this week, and they did in fact beat on their EPS. Their EPS was at $4.18 compared to the $4.17, which was estimated. And the revenue was a beat right there, which is awesome. It was 84.3 billion compared to the 83.97 they were estimating. iPhone revenue was actually a miss by a little bit. It was 51.98 billion compared to the 52.67 that was expected. And their service business did in fact beat it just a little bit, as they did make 10.9 billion compared to the 10.87 billion that was expected. And as you see, the stock reacted very well. Investors reacted very well to this, which is good. 7% is pretty nice compared to when the stock was trading at low 140s. Now it's at 160s, almost 170 now. Let's look at the next one. Abbvie. This is actually one of the companies that I'm probably going to sell at a loss right now. I am down 20%, and this is mainly due to their drug, their Humira drug, which is facing stiff competition overseas, which they're offering drugs, a different drug for a cheaper price. And Abbvie said on Friday it is expected a steeper decline in overseas sales of its top-selling drug, Humira, which is, I said, due to intense competition from a cheaper version in Europe. And the company forecasted 2019 adjusted earnings of between $8.65 and $8.75 per share, which is largely below analyst forecast of $8.74 per share. Yeah, and their adjusted earnings were $1.90 per share, and the revenue was 8.31 billion, excuse me, which was both missing Wall Street's estimates. And I think that I am willing to sell it at a loss just to have some more cash, because as you see in the past year, this company has just been in the decline. It still has that nice dividend, but I really don't want to put any more money into this company in the near future. And let's look at Boeing. Boeing actually is doing pretty well. Boeing, let's look at the 1 month chart. As you see, Boeing is up 22.57% in the past month, helping me out with that $2,500 in the past month for my portfolio. And Boeing did awesome on their fourth quarter earnings. They had an adjusted $5.48 per share, which beats expectations by 91 cents. Let's actually look at it here. If it's, yeah, right here. Look at that. Actually, it's 90 cents. Yeah, 90 cents. And the revenue was also strong. It had at 28.3 billion, which is $1 billion more than what analysts expected. And the aerospace giant reported $101.1 billion in annual revenue, which is awesome. It finally was able to cross over that $100 billion in a year in revenue. And it also provided a strong 2019 forecast. So the guidance was great, and that's what you see here. It translates into the graph. 22.57% in the past month. Good for Boeing. Awesome for our portfolios. Let's check out Microsoft now. Microsoft. Let's look at the past month for Microsoft. Microsoft is up 3.26% in the past month, which is pretty good. I say over 2% per month is awesome. And Microsoft had its earnings and it did $1.10 per share versus the $1.09 per share, which was expected by analysts. And the revenue was at 32.47 billion compared to the 32.51 billion, which was expected, which is basically about the same thing, just a super slight miss right there. Really didn't affect the stock that much. Let's go on to the next one. And the next one we have here is Nvidia. And Nvidia has not been having the best time. Let's look at the past month. As you see, it's up 10.88% still in the past month, even though it had this huge drop off. And this huge drop off right here was due to which management was expecting the company to report revenue of 2.2 billion, which was way below the previous guidance of 2.7 billion. That's a huge miss. That's a pretty huge miss right there, and that caused the stock to go down about 14% on that day. And their earnings don't come on until February 14th, I believe. Let's check it out. Yeah, after hours on February 14th on Valentine's Day. So we're gonna be looking forward to that. It'll probably be a disappointing earnings, as their company has already said that they're gonna be basically down because of what's going on in China. Let's look at Amazon now. Amazon is actually down 5.38% today. And let's look at the past month. Past month up 10.60%. Basically almost every stock is up in the past month because the markets are up as a whole in the past month. And Amazon's fourth quarter results beat estimates, but they did have weak guidance and they have concerns about slowing growth, and they're having heavier investments in 2019, which dragged the stock down. EPS was at $6.04 compared to the $5.68, which was estimated. The revenue was at 72.4 billion compared to the 71.9 billion. And the web services was $7.43 billion compared to the 7.3 billion, which was estimated. So basically the stock is down because of weaker guidance. And as you know, Amazon's a bit overvalued, so just a little bit of bad news and the stock's gonna be dropping like a rock. Let's go on to the next one. The next one we have here is Alibaba. Let's see how Alibaba did in the past month. Alibaba's up 25%. Wow, 25%. Awesome. And Alibaba reported earnings of $1.77 per share, which beat Wall Street estimates of $1.68 for this quarter. Also, they reported 17.06 billion, which was a little bit down compared to the estimates of 17.68 billion for the period. But it didn't keep the stock down. As you see in the past week, the stock is up 6.52%. And this is because the company ended up spending a record amount in 2018, something that the market was happy about, which was basically around 278.8 billion yuan, or yen, I'm sorry if I mispronounced it, or $41.6 billion. So that's pretty good. And investors of Alibaba were happy about that. Let's go on to the next one. And the next one we have here is Facebook. Facebook finally made it up to me, guys. For the past few months of me struggling because of this company, they finally were able to make me happy. As you see, they're up 11.86% in the past week, and in the past month they are up 28.43%. And all these companies are up in the 20% range, and these companies are huge. These companies are $500+ billion in market capitalization. That's pretty impressive to have your company up 28% in the past month. So it looks like the markets are bouncing back very strong, even though that the United States and China still haven't come to an agreement yet with their trade war and their tariffs and all that stuff. But Facebook reported earnings of $2.38 per share on revenue of 16.91 billion, which beat analyst estimates of $2.19 per share and revenue of 16.39 billion. So that's awesome by Facebook. Made my money go up, and I can finally get off that freaking call option that I was holding on for so long. Let's go on to the 2 wheat stocks that I own, 2 cannabis stocks that I own. Yeah. This one right here is Canopy Growth. Let's look at the past week. Past week is up 2.3%, and in the past month up 84.58%, which is insane. Looks like this was a great time to buy. Sucks though because I don't have any money right now on hand. I am working a lot of hours though, so I can bring some more money in, and we can start making more videos on YouTube, and hopefully we can get to that 1,000 subscriber amount, and we can start getting some cash money from YouTube, you know. And we can start adding more, and we can make more videos. And Canopy Growth is doing well. That's awesome. Let's look at Aurora Cannabis. I basically expect the same thing. Aurora Cannabis is up 4.37% today, and in the past week up 12.16% in the past month, up 52.76%. That's crazy. Oh yeah, and Aurora Cannabis is they report their earnings on February 11th. That's why I was talking about buying some options, as you see here, buying some call options for February 15th of 28 cents. Yeah, this used to be way cheaper. It used to be at least 10 cents, so about $10 for one call option. But yeah, it increased quite a bit. So I'm willing to buy maybe a few of these if Aurora Cannabis is willing to go down. But look at that, in the past month it doesn't look like it's stopping yet. Or maybe it is, maybe it's done, and it'll drop down a little bit in next week, but we're gonna have to see. And Canopy Growth actually has its earnings on February 14th as well. So I'm looking forward to seeing how these companies do with their first quarter of the whole quarter actually being, with them being legalized in Canada. So we're gonna see their full revenue and profits and all that coming in. And last but not least is Tesla. Tesla is up 1.69% today, and in the past month up 6.55%, and in past week, excuse me, now in the past month is up 1.95%. And there's actually a trend that we see going on with Tesla. As soon as it hits around the $300 mark, there is a bounce, and as you see, it is bouncing up right now. And Tesla did have its earnings. It had an EPS of $1.93 per share compared to the $2.20, which was what analysts were expecting. And the revenue was at $7.23 billion compared to the $7.08 billion. So they beat that. And the good news is that they do believe that they will be profitable for this year, for all of 2019. So we can expect Tesla to be profitable, and if they are not profitable, that's not going to be good news for Tesla. But I do believe in them. And yeah, guys, that's the portfolio. Past month, probably one of the best months I've had. Up 60.9%. That is crazy. $2,500 in 1 month from the stock market. That's what happens when call options go your way, option trading. If you're good at it, then you keep on going. But if you're not good at it, you learn and try to improve on your strategy. And of course, this is not typical performance, guys. You cannot expect this with just the amount of money that I have. You have to put on a lot of research, you gotta read a lot of books and everything, and make the right plays. And something that I haven't been doing is putting money in on a regular basis every week, weekly, monthly if you can, so you can average down your positions. And if it wasn't for that, I'd probably be up even more, because in this past month, companies were bouncing back from a low point and buying in at those low points, even if you're not perfect, which is almost impossible getting it at that low point. But if you can wait until it bounces back up and then you start buying on the way up, it would have been a probably even better month for me. And that's the end of the video, everybody. Please drop a like, subscribe, turn post notifications on, and I'll see you guys in the next one.